Can you guys hear me? Oh, let's see. There we go. Can you guys hear me? Ah. I can't hear you. You're upside down. Can you hear me? Nod if you can hear me.
Hey, can you hear us? No?
Can you guys hear me? Yeah, you saw that too, Cleveland. Huh? You guys are on the moon. What is this? You've got zero gravity.
I'm trying to flip it over. Can you hear us? Can you hear us?
Can you hear me?
Yeah.
Okay, awesome. After last time too, I had to download Zoom and reload it. So could have been something on my end too with the speakers set up.
Oh.
Aha, now I see the table.
All right,
I got sound.
Got sound?
I got sound, but you're still upside down.
Oh man.
It's all good. It's all good. Is the picture upside down for you, or can you see it properly?
Yeah, we can see you.
You can see me
right?
properly, not upside down?
Huh? We can see you fine.
You can see me and you can see the screen okay?
Yes.
Okay. Well, if it's working okay for you guys, I'm okay with you being upside down. Unless it's going to really bother you. It's not really going to bother me.
All right.
You guys are just short today. Like the market, right? You're just heading down instead of up.
Right.
All right, you guys good? You ready?
Yeah.
All right. Do you have any questions from last time? I know we got cut off a little bit. I really didn't have anything much more to say, too much. We pretty much went over all of it, and you got the recording okay, correct?
Yep.
Awesome. All right. So today, very important candlesticks. I got them up behind me. You guys see them every day in the market. And it's important to really know how to read the candlesticks. They're going to give you a lot of insight into what is happening, shorter time frames, bigger time frames. These patterns that you will learn today will repeat. And if you are a shorter term trader, use the smaller time frames. If you're a swing trader, use the daily candlesticks more for the bigger picture for swinging. All right, so you guys know this is for educational purposes. The ideas and strategies are best tested prior to use. And you know that once you start trading with real capital, that there are varying degrees of risk with every securities instrument, and no past performance is indicative of future performance. All right, so The charts are always going to tell the story of who is winning, right? There's the sellers that are trying to take it lower and they're trying to sell it and take it lower. And then you have the buyers that are trying to drive the price up with the buying price action, right? You wouldn't expect a buyer to get into it and have it drop intentionally. They're going to want to see it take it up. And supply and demand is really what will help you understand this picture. If a lot of people are selling, that means that there's a lot of shares out there in the market. If a lot of people are buying, the shares are limited, and so the price is going up. Now, the number one type of tool to recognize this is a chart, right? And these charts nowadays are either a bar chart or we have the candlestick chart. And Munehisa Homa is known as the father of candlesticks. He was a rice merchant from Japan and really traded the Dojima rice market back in the mid 1700s. And he was a rice futures trader. So originally, there were the candlesticks that were drawn by hand, painted on pieces of paper. Obviously, they didn't have computers back then. And they were charting out the price action. So each candlestick has a component, right? We have the bullish candlestick that we are going to open. Let's see, we'll pick dark blue. We open right here, right? This is the body for whatever time frame that you're looking at. So if it's a 5-minute chart, this is a 5-minute candlestick. If it is a daily chart, this is going to represent a daily chart. Now, this is the overall range for the day, right? From the upper part all the way down, that's the overall range for the day. However, we have where it opens and where it closes right here. So this area down here, the sellers took it down, right? They pulled the price action down by selling, and the buyers said, no, 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 we want to buy it down here. And they brought it up. Then maybe it goes all the way up here. Then the sellers say, you know what? We're going to sell more up here. And they take over, and the buyers are exhausted at that point. The sellers step in and they take it down. And so that's how we end up with the wicks on either side. For a bearish candle, it's going to be opposite. So we have the open right here. We have the price action. Maybe it goes up first, then it comes down, back up, and we close right here. So a little breakdown. You have the body, the wicks, the high, the low, open, and close. Any questions on that aspect?
Nope.
No? Okay, good. All right, now we're going to get more into the specific candlesticks and what each candlestick is going to really represent when you see them, whether they're a strong candlestick, a candlestick that's going to give you indecision, a reversal candlestick. And the more that you guys study it, the better you will be at watching a chart. Aha, okay, we've got this candlestick. It's going to likely reverse here. I could set my stop down here, or I could exit if it comes back down to this point. We'll get into it. So we have the Marubozu, which is basically, we open down here. This is the entire day, right? And it closes strong. So it opened low and it opens at the bottom of the day and it closes at the top of the day. So that would be a very strong bullish candlestick, right? Because there's no indecision whatsoever. There's no wicks on it. So it's very bullish. Vice versa for the red one. We've opened at the top for the day and it just simply sold off all day. No indecision with buyers bringing it up at the bottom. So these sorts of candlesticks are going to be good for swing trading at the end of the day. If you see it long like this, now obviously you don't want to have a whole bunch of moving averages right up above. You want to have it where it's just crossed over the faster moving averages. Maybe the faster moving averages are right here. It's crossed over, it's moving up and closes strong on the day, higher volume down at the bottom. Same is true for potential short, right? We have the moving averages coming down like this. It's just come off of the moving averages. A lot of selling pressure that day. And we have higher volume candlestick right here. So maybe the day prior is like down here. So we have higher volume. It's coming down. Your risk for that trade would be, let me use a different color. This one's kind of hard to see, huh? Let's use yellow. So your risk would be from here to the moving averages. So this is your risk, but we see that there's a lot of pressure. If there was another candlestick up here and there was a little higher volume, you could potentially enter right at the beginning of the day because you see this isn't going up at all, and you follow it down and you might trim your position, but you could still swing some. Good for the Marubozu. Yeah, okay. If you guys can let me know, it's kind of hard for me to see you nodding upside down, but it's all good.
Oh.
All right, now we have the shadow candlesticks, right? So again, these candlesticks all tell stories, right? And that's what a chart's telling you. It's telling you who is winning throughout the day, intraday chart, or who is winning in the long term. Do the buyers believe that it's going to continue going up, or do the sellers believe that it's going to continue going down? And the majority of these trends that we see happen start typically with dark pool prints, that we see a reversal at the top after we've seen a bunch of dark pool prints, and vice versa. At the bottom, we see a reversal when we have a bunch of prints, and then all of a sudden it goes above. All right, so we have the shadow candlesticks. So the shadows have these wicks, right? It's not as strong as the Marubozu because it has evidence of, for this one, selling pressure coming down and evidence of buying pressure here, right? So we have the candlesticks open, and then maybe it drops down at the beginning of the day, and then the buyers bring it right back up. It comes up and the sellers bring it down for our close. So this is our body. It's a smaller body, but it's not closed all the way up at the top. There was still some selling pressure, and it didn't close in the middle. However, if it's in that top half, right, this could still be a bullish candlestick. It hasn't closed right in the middle, and there's some more buying pressure than there is selling pressure, but you have to be careful of one of these. If you see it, and this is a daily candlestick, yes, you might have your moving average here. It's coming up, but this last little bit of the day could be that last 15 minutes of your trading day. So it comes up, it hits the high, it's 345, right? And then, you know what? The sellers decide to take it back down, and it doesn't close strong on the day. So you want to be careful with candlesticks like this. So that's why you wait for that last 345, last 15 minutes of the day to know, hey, is this going to close strong, or is this going to continue to the upside? Reverse is true for the selling candlestick over here. So it's in the bottom third. If it's in the bottom third, right? This is in the middle, it's in the bottom third. So it opened right here. Maybe the buyers took it up. That's really where the shorts took over. They brought it down and the buyers brought it up end of day. We have a close. So it had a red candlestick here and a green candlestick here. Good for the shadow candlesticks?
Yep.
Yeah, all right. Now we have the spinning top. So spinning tops are going to be an indecision type of candlestick. We had a nice wide range for the day, right? Maybe it went down first, it went up, and we opened roughly the middle of the day and we closed with a smaller body, but the wicks are pretty much the same. There's no evidence that the buyers or the sellers are winning. And it can be a day, all right, we don't know which direction we're going to go from here. And if there's higher volume, still, it doesn't give us the full picture. We want to see what's going to come after this. This isn't a good one to make a decision on, whether you are trading a 5-minute chart or trading on a daily chart. This is type of candlestick, you don't know where you're going to go from here. Now, if it's, say, maybe the first 15 minutes of the day, we get one like this, okay, all of a sudden we have a bullish candlestick up here. All right, it's now in a bullish motion. Or we have the first 5 minutes right here, right? Or first 15 minutes. And next thing you know, they take it down. All right, the decision has been made in the subsequent candlestick. But this one in itself is not going to tell you the full picture. It's that indecision. So you've got to wait for more information to move forward. However, what you could do is if you were to go long up here, set your stop down here below this wick. All right. I recommend, excuse me, I don't necessarily recommend, but I use personally mental stops, and I will set an alert here. I'll set an alert if it's going below, because when I put in a hard stop, I find that the algorithms see it, and then all of a sudden, bloop, right back up. You guys ever experience that?
A lot.
Oh, what?
Yeah.
Too much.
Yeah.
Yes, because they sell stops, right? So when you put in a hard stop, you might think, yes, I'm being really good. I'm being so smart. I'm being diligent. I'm putting in my hard stop. However, those can get sold to the market as an order. Even though it's a hard stop, they see it on the books as a potential order to fill. And all of a sudden it comes right down, could take it out to the penny and shoot right back up. It's frustrating, right?
Yes, it is.
So that's where you might want to practice putting in an alert. You put a price alert in and watch it to see if it comes down there. If you had a price alert, maybe it's not going to stop you out. You know, maybe it's going to come right here. Somebody else put their stop just above, and then it goes right back up. So same thing is true over here. You would want to put an alert or a hard stop. I personally prefer hard stops only when I'm in profit, because I see that it will usually take me out. And that's where you would use your risk management on this. This could be, you know, a 15-cent candle. It could be a 5-cent candle. You don't know the range. On Amazon, it might be $15, right? So you have to always remember to use your position size accordingly for that risk management. Good for the spinning top?
Yep.
All right. Next is the doji candlestick. All right. And doji is derived from a Japanese word meaning mistake. So it is another indecision candlestick. However, these combined with high volume will usually signify a reversal, right? So maybe you have a bunch of candlesticks, it's coming down, and then we have higher volume right here, right? Maybe we've got a little bit lower, right? And all of a sudden we have this high volume doji candlestick. As soon as it takes out this high, you've taken out all of this volume. So if this is a 5-minute candlestick, this is a good reversal pattern, right? If it's a daily candlestick, same scenario. Once you take out this high right here, there's a reversal trade potential right there. And same scenario, stop down here. All right. For the potential short trade, hold on, I meant to do this. For the potential short trade, we'll see it just the opposite. So we have the up candlesticks. These are candlesticks, not volume. And then we have this reversal, potential reversal doji. It's not always going to reverse though. You can have a doji sandwich. So you have the up candlesticks, you have a doji, and maybe you're going to have another candlestick up here. That would be a doji sandwich. That would be a very strong bullish trade. All right. But if it were to come down here, you have a candlestick that opens down here, filled in. That's going to be a bearish reversal.
So is that reversal right there? To me, that looks like a abandoned baby.
Yeah, kind of an abandoned baby. We'll talk about it. The abandoned baby though has more of a gap. It's not a doji can be abandoned baby. All right. Abandoned baby would be more like this. I have it coming up, but it's going to be more where you have the gap, right?
Okay.
You have this.
Right.
So it's abandoned. It's out there. Like somebody put it out in the field and you either have to go get it or you're walking away.
Right.
All right. So we have the doji and the doji sandwich. So you also have a long-legged doji, right? And that will tell you if the buyers or the sellers were exhausted. So for this one, the sellers were exhausted because this doji part is in that upper third. So you want to also see where the doji is happening in the candlestick. We could have very long-legged doji where it's equal on either sides. That would just simply be a doji with long legs. It just means that overall it had a very large range for the day, but they couldn't win either side.
Right.
And it would be a little bit harder for that reversal because you have such a wide range, right? So the shorter the doji, right, makes it easier for the reversal, for the range of the day or range of that candlestick. When you have the longer leg doji, we might see that this happens at the bottom, and we'll see that, you know, we're coming down, and then all of a sudden we have this down here. All right, well, the sellers tried to take it down, and then nope, the buyers brought it back up all the way up here, but then the sellers brought it here, or vice versa. It could have gone up first and then down. And as a result, hold on 2 seconds, guys.
You can't go outside in the backyard.
Yes, honey. Sorry about that, guys. My daughter's home from school today. So she was wanting to go outside for a walk. So if it's coming down, we have this long leg doji, then that's going to be your stop all the way down there for the next day, right? And we would likely see that reversal happen. Not always a guarantee, but would likely happen. Could happen to the reverse side as well for sellers stepping into the trade. All right. Now, the dragonfly doji, this can appear at the top or the bottom. And if it's at the top, same scenario, this would be a reversal potential. We have the exhaustion right here, and the buyers brought it back up to the top. The buyers brought it back up to the top, but they were not able to take over, right? So it will end up with that T right here, where you don't have a wick at the top. So it opened, came down, and then it closed right at the top again. Make sense? And it's going to show you that, especially at the bottom of a trend, that it's a very bullish signal because there's no more sellers lined up. The buyers took it all the way up. They had the sellers there. However, it wasn't enough just to take it up and create that upper top, more like a hammer. And the inverse of this at the top is going to be the gravestone doji. And you will see this happen many times on a 5-minute chart. You'll see that these price action is setting up, and all of a sudden, maybe 9:45, they've gone up, they've set the high for the day, they've gone up, they screamed up, they took out the shorts right here. I'm also going to teach you guys about camarillas and pivots as well, and how to use those as targets on your charts when we do our charting. So maybe we have one of those lines right here, and we'll call that R1, which I'll tell you about when we do our charting. And it comes up, and then the sellers take it out and they sell it just below this R1 right here. And notice it's not right at R1, it's just below. Sometimes people will position themselves just below the targets. This could also be a 50-cent increment right here. And maybe this is 49 cents. So when you're getting out, remember to get out just a little before you hit that round dollar, or if it's 50 cents, maybe you get out at 47 cents. If you want to get out at 25, get out at 22. If you want to get out at $1, get out at 97. Because those last couple of cents can really kill a trade. It's the most expensive part of your trade, is that last little bit, and don't be greedy. So the gravestone doji will show you the reversal in the other manner, right? So you are coming up all of a sudden, and especially if we have the high volume candlestick here. Then all of a sudden, usually as it's going up, actually I should make this one lower. Usually as it's going up, we're going to see the volume descending. That's going to signify a reversal. And then you have the high volume candlestick, and you have a gravestone doji like this. All right, game on. Next day, it's likely going to be like this. And it will likely be a reversal to the downside. Good. All right. And then we have the hammer trades. So hammer trades will be like the dojis. However, we have a bit more of the body right here. And again, there's always the story that's being told. It's coming down 5-minute, 1-minute, 3-minute, 15-minute, 45-minute chart. It doesn't matter the time frame. These patterns and setups will tell you how to read the chart and where it's likely going to go from here. However, you also want to add in the component of the volume. When you have a higher volume with one of these candlesticks, that combination will increase the odds that the reversal will happen. So we have the downward trend, we have a hammer, higher volume, and up we go, right? And again, risk down here. We would like to see it take out the top as well. So once it takes out the top, up we go. Inverted hammer, same thing. However, the buyers, it opened here, the buyers brought it up, sellers brought it down, closed here. All right, we need to wait until it takes out that top, because we want to make sure that all those sellers are exhausted, right? That's the reason why you want to wait until that top of that candlestick is taken out. It's just as if you'd had a resistance right here, right? Say this is a resistance on a daily chart and it's come up to it a couple of times. We need to make sure that there's no more sellers. And the best way to ensure that is when it breaks through, right? You don't want to get in only to have it reverse right back down and they take it they take the trade right away from you. Does that make sense?
Yep.
All right. So we have the hammer, inverted hammer, hanging man, right? Hanging around up here, and shooting star. So really when you have a hammer, whether it's a hammer, inverted hammer, or this looks like a regular hammer called a hanging man, and then the inverted hammer at the top is a shooting star. When you have the volume combined with it and a hammer in general, it will usually signify a reversal. But you need to have the volume with it too. It's not just a hammer is always going to give you a reversal. If you have a hanging man with really low volume, right, then that might just be, you know what, we need it to be taken out. And we might see that the next day is like this. And then all of a sudden, we have another hammer. And then it goes right up here and it takes out the high. So you want to wait until the candlestick has been fully engulfed by the price action the next day. That makes sense?
Gotcha.
Cleveland, does that make sense to you? I can see you, Kyle, but I can't see Cleveland. Good? It's okay. It's okay. I just want to make sure. All right. Which brings us to the engulfing patterns, right? So engulfing patterns will give you that reversal as well. So we're heading in the upward trend. All of a sudden, we have an engulfing candlestick. All right. So what does the engulfing mean? All right, that was not a good straight line. But we have the candlestick and it's taken out the high and the low. It's like, it's the Big Mac compared to the hamburger. It's much bigger and it takes it all out, right? And so that's going to be, all right, we close below this candlestick here. There's more selling pressure, right? Now, if it had closed down like this with the candlestick full, whoops, looks like my 3-year-old, that's even stronger signal because we don't have any buyers taking it up right at the end of the day or right at the end of the candlestick, right? So your highest confirming candlestick will be when you don't have any wicks. Then if you have a small wick, all right, there was a small amount of reversal pressure. The dojis, very small candlestick, big wicks, highest indecision, right? And the opposite is true for the bullish engulfing. We come, hey, this is taking out the entire candlestick over here, including the wick, right? So now we have all this buying volume. Now, they can also create a bullish engulfing with very little volume. What you have to remember is that the really big guys of the market have the ability to create a candlestick how they want it to show up on the chart. So that's, they can manipulate it. All they need to do is place a trade between themselves up here.
That's right.
I'm going to blow your mind when you see all the dark pool stuff, but they can completely manipulate candlesticks to show whatever type of candlestick that they would like for that day. So they could say, all right, you want to have a doji candlestick? No problem. We'll go ahead and we'll sell it off and we'll close it right down here in the middle of the day. They have enough money to manipulate where it's going to end up closing. They can put their buy and sell orders there, buy from one of their accounts and sell to another one of their accounts and close it right there. They have the ability to do that. I know it seems dirty. However, it's completely manipulated in the stock market. And so when you know that, then all of a sudden, aha, what is the other key indicator that we have to look for? It's not just the candlestick. We need the volume, right? If these guys want to take it up and take it as a reversal, We need to have that volume proving that they're going to do it. If they're not
So,
proving that, then they could easily take it down the next day.
so they can't mess with the volume. They can't mess with the volume indicators.
They can't really mess with the volume. There is a way for them to report a trade 24 hours late. However, most of the time, that's only on the major indexes. It is not on individual stocks. It would take too much effort for their individual stocks. So it's usually just on the SPY, QQQ, IWM, DIA, or VXX, which is the fear indicator for the SPY. All right, and I'll tell you guys this too. So the VXX is not something that you want to trade. Did we go over this at all yet? I don't think we did.
No.
Okay. So the VXX is the fear indicator. What that really means is that it's a measure. Well, this is based off of the VIX. And what the VIX measures is how much people are buying puts on the SPY. So they're buying protection against the market going down. So if you guys have ever seen unusual options activity or high, more buying of puts than calls on a particular stock, that can indicate that people have fear that that stock is going to go down. Well, the VIX indicates the fear that people have on the SPY. So these two instruments are not good to trade. Do not trade them. They're always going like this. Why? Because the SPY and the stock market in general are going like this. So that would make sense. If the stock market is generally going up, you would expect people to be buying calls. So the value of these you would expect to be dropping and dropping and dropping because the market's continually going up. The only time that these go up is when there's a correction. And majority of the time, the market's not in a correction, it's bullish. So you want to use this only as an indicator, not for trading.
So what about puts on those?
Yeah, puts, you could buy puts. However, it might almost be better to sell calls. I don't sell calls, but in general, the puts, it might not drop as quickly as you would anticipate. And so you might still lose money on it. Right? So if it's continually going down, if you sold a call up here and you have the premium decaying, the only time you would take a loss is in a correction. Make sense? All right. So the VIX, and part of the reason why this is so high lately is because people had so much fear. If you look at it, hold on, let me bring up the chart for you guys. Always easier with the actual chart. I got off topic and we still have 5 more slides. All right. But I will show you guys VXX. And I will show you this while that's loading. I think it was this day, the 20th, I think. There's 498,000, that's not it, the 21st. All right, so the 21st, this is part of the dark pool, right? We had 1.29, almost 1.3 million on VXX. Now I come over here, VXX. I should have it right on my chart. It didn't save it. All right, so you can see on the daily chart here, what's happening. Long-term time frame. What's going on? It's just going down. Okay, this was February. Yes, there was fear in the market, right? This is when coronavirus came around, everything like that happened, and boom, shoots up, right? Went from 13 to 78. and then came right back down. Now, usually it's down here. It's in the 15, 16s. It's usually below 20. And this will always split as well. They'll split this. They'll do the reverse split, right? Not the chart you want to get into, the reverse splits. They do that for many 3 times leveraged and 2 times leveraged ETFs and ETNs. So the VXX, we had a big print on the 21st at 22.96. That's the 22nd. Let's move it over here. And settings, 22.96. So this trades the opposite direction of the SPY usually.
Okay, so is this somewhere where people can go if the market was going to crash?
You could potentially buy VXX. However, it's always dropping, right? It's typically always dropping. If we see that we go above this, then that would be an indication that the big guys are planning on taking the market down. However, this is now day 2, and we haven't even touched it. So when we put this side by side next to the SPY for the past 2 days, right? This is up here, and you can see how the SPY doesn't have the exact same price action. The SPY is really been hanging around over here, kind of the same, like inverse, where we have the SPY, seems like it just was bouncing off of that 425 EMA, and now it's almost as if this yellow line right here would be almost like this gray line, where it kept touching it, and now we're up above it. So the fact that we are below it on VXX, the big guys could have shorted this. They could have shorted the VXX, and they could be buying. This might be in relation to the stimulus package. Maybe they know something. Somebody always knows something. All right. When we see a massive print like this, somebody knows something. And so we pay attention. Sometimes they will take it in the opposite direction first, add more to their position, and then move it.
When was that?
This was on the 21st, October 21st, so 2 days ago. So we've got the SPY, it pulled back. Look at how it tends to bounce right pretty much off of that 425. And then look at how we went from the 6th of October down here at 334, 6th of October, 12th of October. A week later, 20 points, right? It was consolidating together and then it shot up. Well, this might be a big indication that we might have a massive move in the market, just so you guys are aware and prepared. All right. So that was a side note on the VIX. Let me continue so we can get through the other ones, and we'll pull up the charts and we'll look at it again some more, but I want to get through the candlesticks for you. So we have the piercing and dark cloud cover. These are also going to be reversals when they happen on a downtrend for the piercing. So the piercing is going to open below the candlestick prior, and it's going to close somewhere in the body. Usually you want it to take out at least half of the candlestick, and that will signify it's going to reverse to the upside.
Oh,
but if you see this, you know, it's trading like this and you happen to see it, it's not always going to reverse right away, right? You want to have that downward trend first, then you have the piercing candlestick pattern, and then up to the top. So maybe this is our target. Maybe this is a round number. We'll say $25, just as a nice round number. And then this is the day before. Maybe it goes to 24.80. This day opens up 24.92. touches 25, and we close down below, almost at, we'll call this 24.50.
All right, so for the piercing one.
Yeah.
Okay, you have to wait for the second candlestick for confirmation, right? Like not just the first one.
Correct. Well,
Right.
here, yeah, you have this one, which is a red candlestick, and then you have the next day. That's the
Right.
confirmation. That is the reversal candlestick. It's the start of the reversal, and then once you take this out, reversal is in full motion.
Yeah. Okay.
All right. Good question. All right. Then we also have the white soldiers and the black crows. Again, you must have these in conjunction with a downward trend for the 3 white soldiers, and then an upward trend for the 3 black crows to take it down. All right. So we have the weakness right here, that this is coming down, and then all of a sudden, you know what? All of these sellers are exhausted. There's no more sellers. The buyers have the power. They're taking it up. So this could be, again, a 5-minute chart. It could be a 15-minute chart, a daily, a weekly, a monthly. Good?
Yep.
All right. And here we come to the abandoned babies, right? So for the abandoned babies, oops, that was not a good line. Let's do that again. I wonder if I could do a straight line. So the abandoned baby, we have the gap. And here as well. So you think about it, it's gapped up. And we're talking, well, this could happen on a 5-minute chart too. You think about it, this happens on the low float momentum stocks sometimes. If you have a halt, maybe it's going down, you have a halt right here, and then it opens up down here, halts again, and then gaps up, and it reverses up to the upside. Could be on that daily chart as well. And this gap, sometimes they will fill it. If they fill it, it's no longer an abandoned baby, right? It's only an abandoned baby when you have that gap space around it.
All right.
All right. And otherwise, they might take it up. Well, they wouldn't take it up there, but they could take it up here and then bring it back down. But it's really when it gaps up, and then the next day it gaps down. Sometimes you'll see this on earnings, where you might have a doji candlestick and it's an abandoned baby doji. And you could have a long-legged or short-legged doji at the top. It's just going to have that space between the two, right? And then it brings us to the island gap. So the island gap takes it a step further than the abandoned baby. We have the candlestick down here, and it's trading right here. This could, again, be multiple different time frames. It could be 5-minute, it could be daily. And then it will have this gap. Later on, if this were to reverse down, it might fill that gap to the downside. Usually, when you have a gap in a chart, they try to fill it. So if you've ever seen the SPY, for example, so let's go back to the charts. Usually, the SPY, let's go to this as a daily chart, will always, zoom it in, will always fill the gap, right? So here, this day it opened, we still had a gap over here, right here. This is a gap space. And it took them a couple days, but they filled the gap. 1, 2 days, filled the gap. This day, it opened down here and it came up. So the white candlesticks on my chart are down days. They would be a red day. And we also, it opened down here, so we filled 2 gaps on this day. Do you guys see that?
Yeah.
So we filled from here all the way up to right here. And this other part was filled before. So knowing that, yeah, go ahead.
What are the reasons for those gaps?
What are the reasons for those gaps? If you put on the 24-hour candlestick, the gaps really disappear, huh? The gaps are set up only when you see it on a daily candlestick. So it's not counting for the the extended hours trading. If we look at it on extended hours trading, you don't really see any gaps. You see maybe just a little bit here, but the wicks have already taken it out. Same thing here, the wicks have taken it out. So a 24-hour candlestick gives you a bigger picture, but the daily will show you the gaps that are to be filled. One that had a big gap today was AT&T? No, not AT&T. It was Intel. Intel has a massive gap, right? So what do we have down here? What's this?
Volume.
High volume, and what's the candlestick?
Doji.
Doji. And what else is it? Abandoned baby, potentially.
Right, right.
If we happen to gap up on Monday, all of a sudden over the weekend, oh my goodness, Pelosi comes out, yes, we've written the bill, we're voting on it on Monday, okay, I can convince the House or the Senate, she's the House committee leader, I think, to go ahead and vote for the bill, everything's gonna be great. Guess what? When we look at it on the 24 hours, there's that gap down, right? There's the gap that happened yesterday, and this is today's price action. When we look at it on the daily, you don't see that gap. You don't see the drop that happened after hours yesterday. So we could go ahead and open up over here, maybe on the 50 simple moving average, and we go up from here, right? There's that possibility to gap up and create an abandoned baby. And then it will be a gap to potentially fill to the downside if we were to contract back. Also, I'll also show you guys what I saw on Amazon today. So on Amazon, we don't usually see bigger prints. Actually, I don't even, oh, this isn't today, that's why. So we had 48,000 right in the middle of the day. This is abnormal. Like 50,000 on Amazon is kind of an abnormal. Hey Alexa, hey Google, what's 48,000 times $3,150?
Wait, they bought 48,000 shares?
That was a $151.2 million position today on Amazon. Whoops, AMZN. On Amazon at $31.50. Where did we close? We closed up $40 bigger than that. Now, there's earnings next week for Amazon. Why didn't it change the price? So you can see when we look at the daily candlestick here, do you guys think it's a coincidence that that's pretty much at the bottom? $151 million position was just placed on Amazon today at the bottom. I say at the bottom because right now our price action is up above it. And we have earnings coming up. We're in a wedge as well. And there's a good chance that we could be breaking out of this wedge next week and seeing new highs on Amazon. No guarantee, but for now, we're seeing prints at the bottom. If I go back, let's see, did we have any yesterday? I just saw that today and it caught my eye because we don't usually see it. This we ignore, this we ignore, anything at 4 o'clock we ignore. It's more the middle of the day. So we had 50,000 at 31.70. All right, so that's another one right here. Put it right there. Hold on, we change this.
Amazon.
Yeah. So, okay. So there's a potential that maybe they shorted it and maybe they bought it here. Let's see. Do we have any more prints? On the 21st, ignore. Okay. 50,000 at 322. That was the exact same number. So maybe they shorted it the day earlier at 32.20. It was the exact same amount. So there's a good chance that they shorted it up here at 32.20 and covered the next day. Right?
Those
So,
dark pool,
yeah.
those dark pool prints, that could be options too, right?
Well, it says stock option, but it's all in the dark pool. Many times it says stock option. So sometimes it could be synthetic, meaning if they bought a lot, maybe they bought puts as insurance for that price, but not always. We don't look at it like that. We just look at where does the price action go from here. All right. Well, we've had 1, 2, 3 days of big prints. Let's see, have we been getting 50,000 all the time? Usually we don't get that, but we've been getting a lot. 1245, 75,000 at 32.30. All right, so 32.30. $75,000. So now we see we've had 4 days of prints. 75,000, 50,000, 50,000, that's 175,000 plus another 48,000. We're talking 225,000 shares of a $3,000 stock. I don't care if it was buying or selling. If we go above 32.30, if we go above 32.40, 32.50 and close above there, we're seeing new highs on Amazon. We come down and we close below right here. Oh, market's moving up. We come down and we close below 32.20 here. Or this is 31.25. We're going down. The whole market will likely go down then because Amazon is such a big player in the indexes as well. So tracking all of this together, plus seeing, what do you guys see right here? What is this candlestick as well? That happens to be on the bottom. What's this candlestick called? Hammer, you got it. That's right. And up here, you see, we have a doji as well, confirmed by this candlestick. So you can see how they, look at this one, another hammer. What happened? We were coming up, hammer, came down, a little downward trend for a couple days. Then we had higher volume. We also hit the moving average. Now we're coming back up. We also had a bit of resistance here with the 50 simple moving average, this blue line. So right now, if we pull, let's see, the 24-hour chart, we're also up above 2 of these prints right now. So we're right in the middle. So they might buy or sell some more, whatever they're doing. I don't know what they're doing. I don't need to know what they're doing. All I need to know is, are we going up from here? Okay, I'm following them. Are we going down from here? Okay, bear hat, right?
Right, follow the money.
Exactly. Follow the big money. It's Show Me the Money from what was it? What was that movie? Jeremy Maguire. Show Me the Money. So the ending slide for today is don't give up, guys. You never ever know how close you are to your success, right? So just keep at it, keep practicing. How is the paper trading? I'm going to shoot you that journal right now.
Going good.
It's going well. You're getting better at cutting your losers. Well, you say you don't have a problem with that, Kyle. How's it going for you, Cleveland?
Going good.
It's going well.
I bought some, and if it drop a little, I kind of watch it a little bit, and I just take a minimum loss. If I lose anything, not much.
Okay. Were you using real money or paper trading?
I'm using paper trading. We got into the paper trading contest.
Okay. Who's winning so far?
I gotta actually look, but it's like every time we get in so late and it restarts. It starts all over again.
It starts every week. So
Okay.
I mean, I've been doing pretty good in them. I haven't like, I guess it don't matter unless you win it, right? But I think last week I came in like 45th place. They had like 10,000 people in there.
Mine, I had to wait. Yeah, it was like you had like 400, huh? You had gained like 400. The top person was like 600. That's the bell.
There's the closing bell. Right. Nice. Yeah, and the SPY's continuing. SPY is up on the day. Qs are up here. We'll do a little recap. So SPY is up on the day, right? We came down here. Look at how we had a little bit higher volume as well when we bounced off. Here's our doji at the top, and it pulled back. We came here. We had a little bit of an indecision doji. This was a doji sandwich, right? It came down. We're in a downward trend. Doji took it out, but the next day we brought it right back up. And once we take out this high here, we'll likely see 346. We break above that. We're continuing to the upside. And the Qs as well. Here we have a bit of a hammer, right? But we haven't taken out the high right here at 287. But on the chart, let's zoom it in a little bit on a 45-minute chart. Are we above that downward trend line? We closed above the downward trend line. We're likely going to be heading back up now because it's taken out the downward trend on the daily chart. See? And we have a, what is this one?
That's not a firefly. No, what is it called?
You got it.
Dragonfly.
Dragonfly. That's right.
Firefly.
It's flying up. It's good. It's all good. Dragonfly, firefly. You just added some wings to it. Now we're going to go up even faster. So you can see how these patterns will play out. And here we have a hammer at the top. So you'll start to see the patterns more, and you'll start to be able to read the candlesticks more so that you guys have even better profits. All right. All right, guys, have an amazing weekend. I will see you all on Tuesday. I'm going to shoot over that trading journal link for you. So you guys can also, I mean, if you're doing a paper trading contest, you're probably journaling it in the contest as well. So that's good. But try to keep track of it all so you'll be able to improve every week. And you'll be able to see what you're doing in your trades. If you guys want me to look at it as well, I can look at it and review it on the charts. So I can see and maybe help tweak you guys and improve your trading as well.
Okay.
All right. So have an amazing weekend, and I will see you all on Tuesday.
Dang. Well, hey, when could you have this video ready for us?
When will I have it ready? Ready? As soon as it processes, then I will be able to upload it for you.
Okay.
All right.
All right.
So as soon as I have it, I'll shoot you as soon as I've got it uploaded on the YouTube link for you, I'll shoot you a Twitter message and you'll get it as well on your email.
All right. Thanks.
Okay. All right. Have a great weekend, guys.
All right, too.